able to hear me and see my screen flip on over really quickly. For those of you guys that haven't been around me or don't know me yet, my name is James Bishop. I've been in trading and trading education for I don't know 17, 15 plus years. It's around 17 plus years. Somewhere in there, since as long as I can remember. I've worked in real estate and asset management. I worked in real estate investment as well, on the private equity side. I've worked as a director of capital markets for a hedge fund. Right now I co-own and co-found a hedge fund. Well, I should say it's an individually managed fund, which that I talk people to about one on one. Um, I also own and the founder of a company called One Life Financial, um, and I have my MBA in finance and global portfolio management, and working on my doctorate in finance and economics as well. It's what I do here today, and what we're going to talk about today is truly, truly a culmination of all of my combined passion. It is about retirement planning. It's a retirement hack that I think every single trader in this world should know and participate in. We'll also talk a little bit about some fundamental news that came out, do some technical analysis together as well. And I'm going to be inviting you guys to a special session that I host every Sunday night. I'm going to be inviting you guys to a special session that I host every Sunday night. It's a free session. Literally, it should fit in everybody's budget. Type in a yes if you can afford free. Give me a yes real quick if you can afford free, because I like giving. It's funny. People say like, oh well, why would you even do it if you're just giving it away? Well, if I'm doing it anyway, and it lets me talk about it, and then the thing that I love is that like you guys ask me questions that I don't think about. So I get your collective brain power, some of your novelty, some of your not novelty, and I get to sharpen my skills as well. So if free fits in your budget, type in yes, because I'm going to give this away if you want to join. It happens every Sunday night. There'll be 2 or 3 Sundays coming up that I won't be able to do, but we'll probably do recordings for them beforehand and have those with you, be able to be sent out to you. And then I'll also give you guys some other just tips and tidbits. Before we get started, though, and really dive into everything. Can I ask you all of you here are traders, right? Type in a one in the chat box if you're a trader. And for those of you guys that don't know where the chat box is, let me go ahead and share that with you again. Hold on. Right there, you should see chat on the bottom bar of your Zoom screen, and you can hit the chat button, and then I'll be able to see your chats directly to me. No one else will be able to see your chats, just me, so don't have any fear. But how many of you in here right now are actively trading in the Forex market, the stock market, options, futures, cryptos? Type in what market you're trading in as well. Benoy, my man, I was just writing your name down to give you a call. So that is it. I wish I could show you my camera, my friend. That's hilarious to see you here. I'm glad you're here. Options and futures, S&P futures. Charles G, man, you are a person after my own heart. I used to exclusively only trade ES futures, and then I slowly added other things when I was getting started. Now, for all of you guys in here that are trading, what's your goal when it comes to trading? Right? What's your goal when it comes to trading? For all of you guys in here, what is the number one thing you want to accomplish when it comes to your trading? Right? Most of you guys will say money. Now, I personally believe that money ain't the most important thing in life, but it's right up there with oxygen. when you when you guys agree with me on that one, it's not the most important thing in life, but man, it's close to oxygen. It's up there in the things because it's important because of quality of life, the mobility it allows you to have, the freedom it allows you to have, right? But it's more than just money because we don't want to make a bunch of money, fling it out a car window, right? Or go and spend $6,000 a day to go and just sit in the grandstands at Monaco for the Monaco F1, which is a mediocre race, but don't tell anybody I said that. It's retirement. How many of you in here you're trading because you want to supplement your retirement, you want to grow your retirement, you want to make your retirement the best that it can possibly be? Give me a wire yes if that's you. How many of you is it just to get rid of some debt in life? Right? There's some sort of debt. Like, look, I'll tell you, personally speaking, they don't take smiles at the business school that I'm getting my doctorate at. They don't. And I got a good smile, you know? So do my dogs. But and what about leaving a legacy? Like building wealth that you can leave to your kids or grandkids so that they can have upward social mobility for their future, and you can begin to be the one that grows that wealth, right? Of course, yes. And then lastly, I know this one's on everybody's lips, is financial freedom. Can I ask you this, right? How many of you in here you you're really good at having like a bunch of great trades in a row? It's like win, 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 and you're just like, man, this is trading so easy. I can do this, I can make this money from trading, only to give it all back in one trade, and you're just sitting there like, what the hell happened? Has that am I the only one that used to happen to? When I first started trading, let me tell you, I'll give you an anecdote here really quickly. I took a trade in the USD JPY. Okay. First of all, I turned a $250 account into $2,000 in less than 30 days. So I was too hot to trot. Nobody could tell me nothing. And I took a trade, and overnight it tanked. I didn't trade with a stop loss. It blew up my account, and I went from 2,000 to 25 bucks. Has that ever happened to you guys? Yes or no? Yep. 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 Guys, the feeling sucks, right? It really does. So I asked this question, and I'm not going to have you answer it in the chat box. I'm going to give you guys a private survey. So right now on your screen, it should say, how good are you at trading? All right. Where 0 is you are absolutely surprised if you win a trade. And a 5 is that you never ever take a loss. I want you to click on what number represents you. Okay. What number represents you? So I got about 30% of you guys have answered thus far. I'll get one or two more and then we'll end it here. Man, you guys are great. In 30 seconds to get 30%. Trust me, I've been in webinars before where, man, it was mighty, mighty. It was like pulling teeth. Okay, so there we go. So I'll share the results, okay, just so you don't feel alone. There's, a few of y'all are looking at 50 percenters, right? You're like, I'm okay, but I'm not doing great. Right? What is that? What's the impact of that? Well, the first thing that lets me know is that one, we need to improve that. And today, guys, I promise you, whether it's you're just here to learn a little bit, or you end up booking time with me, or you end up starting to come to my Sunday sessions, I don't care. I'm here to help. That's what my biggest passion is in life, is helping people. I was an 18-year-old kid driving to school one morning, and I was late to school because I pushed an older lady's car off the road when it died. I'm that guy that helps people. I just do stuff like that. That's how I was raised in it, being military. But the other thing is it tells me is that perhaps there's a better way that you can invest your money and make money and double every potential dollar that you have. So I'm going to ask you a simple question. Just yes or no. If you had a way to invest without ever losing again, not losing a penny, how many of you in here would be interested in taking advantage of something like that? Just a yes if you would. No if you don't. Ben, thank you. Charles, thank you. Michelle, good to see you. Man, Bill, thank you as well. Jeffrey, thank you. Because today, guys, my goal is to have you leave here knowing how to never lose in the market again, how to protect your investments and allow them to really, really grow, and to get results like this. So this is part of an actual client statement. Now I had to pull it, off of all of his private information off of this, but he invested and in September 2024, he generated a return of 24.76%. In October, just 1 month later, he generated another return of 33.27%. And in November, he generated a return of 19.98%. Now, these are over two different investments, mind you. He opened the account, by the way, in 2023, and these are now his 2024 investments I'm showing just because I wanted to show recent results. But imagine if you open that account and over those 3 months, you turned $100,000 into $144,193.41 these days. Don't forget that 41 cents, right? That's a 44.19% growth in 3 months. Now, this growth is 100% possible. And I'm going to go over the details of how you can have growth like this and lock it in to never lose a penny of that growth ever again. Okay? This is a amazing tool and it can benefit truly everyone no matter where they are in their life. I have something that I truly know can help you. But there's a few things that I want to understand first about, well, want to share with you about what's going on in the world and in the economy. Okay, because there are some things that I've noticed that I've talked about a bunch, and I'm going to share some of these as well with you, that are really driving the market today to create some rather crazy circumstances, to say the least. Okay. But how many of you saw this news announcement that came out today where US GDP shrinks less than anticipated? It still shrunk, but it was less than anticipated. How many of you did not know about this announcement today? Type in a wire yes if you did not see this announcement, didn't understand this announcement and the significance of the announcement. Type in a wire yes if you did not know that. Yeah, a lot of people, look, it went under the radar because today was dominated by tariff talk and the legal fight around tariff talk, right? A lot of people in here saying, hey, it was, I saw it at 8:30 this morning, but then it just kind of went away. Well, here's the thing. I'm actually going to bring it up. Let me see. Here, I'm going to actually give you guys your first gift right now, okay? Everybody, I'm putting this into the chat. Let me chat this to everyone. This is a website. Bookmark it, save it, keep it. Don't ever let it go, okay? Do not ever let it go. Because I am telling you guys, you do not want to miss out using this tool, all right? This tool is called Forex Factory. And it's not just for the Forex market. It's basically a trading news website, right? And it's really simple and easy to use. I love it. I've been telling people about it for years. So I'm going to go from April 20th to today, and I'm going to look at for one specific announcement, non-US. And so last quarter, actually, I could do this a simpler way. I don't know why I'm trying to do it the hard way. So last quarter, GDP was negative 0.3%. This quarter, GDP was negative 0.2%. What have you always heard about 2 negative quarters of GDP? What has that equaled? Starts with recess, ends with Eschen. Let's see who can. Ben's the winner of it. Ben, there's a little something extra in your paycheck this week. Okay, so you win the non-existent prize. How about that? But no, that's the truth, right? Most economists in the world would consider two negative quarters or two negative GDP quarters back to back being a recession. Now, are we in a recession? I don't know. Here's the thing that I will tell you, right? Is that there are actually in the United States, according to every textbook I've ever read, it's such a microwave society and Instagram society. We talk about that all the time, but there are actually five major markers of a US recession. Go ahead and screenshot this if you want. Use your phone, take a picture of it. But this is what we're looking for to identify a recession. One is a drop in consumption. Hmm, not happened yet. It happened, then it came back, and we'll see what happens going forward. Because once tariffs actually hit and we, start seeing the impact of tariff, because we haven't even seen the impact of it, right? We don't know, do people shop less? We don't know, are prices going to rise? We don't know, like, we can assume because that's what's happened throughout history, but we don't actually know for certain, okay? An inverted yield curve. We have that. We had that, I should say, for 744 days. We had the inverted yield curve. It was the longest inversion in US history. And the other major thing about that is it's not the inverted yield curve. The inverted yield curve precedes the recession. When it reverts, uninverts. How do we want to say that word? We're going to make a new word today. Okay. When it goes vert again, that's when we begin to see the recession, and which happened late last year. A rise in unemployment. Well, we can see that, hey, unemployment claims have increased. But why haven't we seen a true rise in unemployment over the last little bit? Well, the reason we haven't seen the true rise in unemployment with non-farm payroll change is because two things have happened. One, it takes 6 to 8 weeks for before companies and before unemployment people can file for unemployment, and that's one measure of it. The other is all of those government workers that were shut down, um, and let go, they're not being counted until June or July. So we may see these numbers change dramatically over the next few months. I'm giving you guys a preview right now. You should write that down and pay attention to those numbers because they will affect every market. Okay. Now, we're talking about the unemployment rise. Now, industrial production and retail sales stagnation and GDP decline. Well, we've seen the decline. We've seen the yield curve. We've seen, we're waiting on consumption and production and unemployment. Well, here's something else that, I don't know if you believe in forecasts or not, right? But I want to share something with you all. And this is not to drum up fear at all. Because quite honestly, we shouldn't care if the market drops or rallies. We should, because it creates volatility. And as a trader, we can make money. And as an investor and as somebody that wants to retire, that might cause a little bit of fear if you don't know the tool that I'm going to be sharing with you in just a minute. Well, what you're looking at on your screen is actually from what's called a Bloomberg terminal. So for those of you who have ever heard about those and never seen one, this is actually a screenshot from one. I have access to them because I manage an endowment fund for a university. And I pulled this data out of Bloomberg the other day. This is people that are seriously delinquent. Oh, wow, I drew that really bad. Seriously delinquent, which means 2 or more months behind on their mortgage. Okay. Just for perspective, this is the peak in 2008. We were right here, this peak right there. This is where we are today. Now we're already seeing housing prices correct in Florida dramatically, like 40% month over month drop in Port St. Lucie and 30% in the villages and 15% where I live just north of Orlando. But we're seeing things happen, right? There's also some other crazy statistics out there about renters. 9.5 million people are 2 or more months behind on their rent as well. This is we're living in a, you know, kind of like a I don't know what's going to happen time. But quite frankly, you don't have to worry when you have access to what I'm going to be sharing with you here in just a little bit. Now, the economic cycle here, okay, this is just a 4-year economic cycle. I literally took this with my phone out of a textbook, so sorry it's a little pixelated. But really, you think 4 or 5 years ago, short-term interest rates were low, the economy was looking weak, stock prices were rallying, we had a recovery, the economy began to overheat, right? We saw all-time highs, we saw bond markets tank, commodity prices like oil and all of that rose, which can we just pause for a second? Has anybody else noticed that, oil is half the price of what it was 2 years ago, but gasoline ain't? Anybody else seen that, or is it just me? I digress, right? Inflation began to rise, and so they raised short-term interest rates. This did happen slightly. This has happened. GDP begins to decrease. The next things that are, right? The next things that are potentially going to happen, property values begin to fall. Could we enter into a recession? Bond prices begin to rise and inflation falls, right? The thing that fix high prices, fix it. High prices fix high prices. That just is what it is, right? Now, this type of analysis where we take the fundamentals and then we attach them to the actual charts and come up with predictive potential analysis and as well as pull trades all the time. That is something that I do in what I call my Sunday service sessions. These are, again, for those of you guys that just joined us, thank you and welcome. These sessions, I give them away as free. It's 1 hour, 7 p.m. Eastern on Sunday nights. And it has to be an hour because I have an 8 o'clock meeting that I host. So it just has to be. But we cover the major fundamentals. We cover earning seasons. We cover trading opportunities. As a matter of fact, last week we talked about four or five trades, and every single one of them paid out and hit all the profit targets that we posited in that session. This is what I'm going to do. Okay. I'm going to give you guys the link a little bit later to get into those sessions. Okay. I'm giving you a month of Sundays, right? I'm not charging for them yet. I may in the future. I don't know, but I have a lot of great response. And you know what else I'm going to do really quickly? Bear with me. Any Discord users in here? I actually created a Discord channel that I'm going to share with you all in a couple seconds when it updates. And then you guys can also register for the Discord as well. So we'll do that here in just a little bit as well. So the next thing I want to do is if you want to see how those fundamentals marry into the stock market, what I want you to do is type in the word go right now in the chat box and let me know you want to hit the live market, my friends. Let me know you want to hit the live market. So now, love it. Thank you, Michelle, Bella, Bill, Charles, Ben. Fantastic. I'm going to send you guys. Here's that Discord channel. If you want to go ahead and join, I'll give you guys about 30 seconds and then we'll hit the charts. As you see, I have them up. I'm going to take a sip of water. And if you want to join that Discord, speak now or forever hold your peace. It's going to be, that link will expire in 7 days. I've been about that because I watched the new Mission Impossible. So go ahead and join if you want to. All right. Thank you so much. See a couple of you guys in here that have joined. Fantastic. So Let's get into the charts. Now, the first thing I have up here is the SPX, or the S&P 500. It really, that we're just looking at the index, okay? And I use this as my measure of the broad market because it's 500 stocks, and it's not weighted heavily in one sector or the other. And it gives us a broad overview of the market. So we can kind of get a sense of where things are happening and what's happening. So when we look at this, okay, when we look at this here, we can see that forever and a day we were in an uptrend, right? We were in an uptrend, and the market came down and hit and bounced off of our long-term trend line, right? But our inner trend line absolutely broken, right? From 2023 till March of 25, we broke that inner trend line. We did bounce off that outer trend line, as you guys can see there. And we began to form a downtrend in the market. Okay. Now, for those of you that don't know, I'm going to use a tool called Fibonacci's. And if you ever have questions on them, at the end of this, I'm going to give you guys a chance to book time directly with me on my calendar. And if you want to do that, I will teach you anything you want to know trading wise or retirement management wise. We'll do whatever kind of review you kind of want to do. But we had this downtrend with this fib retracement going on, and we see that the market has pulled back into this kind of blue zone there. And we also have sub fibs going on where the market is making higher highs and higher lows. And so it begs one to question, are we going about to melt up to all-time highs, or are we going to pull back down and are we going to make new lows again? Well, it could do either, right? It could go up or down. How about that for a great prediction? Who in here is just impressed with my prediction I just laid out? If that isn't the most John Madden, if you remember him from the NFL days, analysis right there. I think the market may go up, but I also think it could go down. Right? I mean, man, what a call out. At least I can call myself out on these things. No, I'm going to give you guys what I think is going to happen. All right. Um, and I'm going to do so. First, I'm going to hide these fibs here for a second. And I'm going to point out one. Ah, Brian, I like where your head's at. I'm going to point out a couple of things. Okay. How many of you have ever heard about something that's known as efficient market theory? Who in here has heard about something called efficient market theory? Ben Lovett. Bill says nope. Nope. Okay. So what efficient market theory simply states is that the price of any given instrument reflects all available information of that instrument at that given time. But we see there's some price discrepancies that happen and occur from time to time. Things that create what are known as market gaps. Like a great example, right? We on November 5th of 24, the market closed at 5783, and then the next day it opened at 5864 because some sort of something came out and just bam, the market just rocketed higher. And somebody had information that others didn't. And then what occurs is that, hey, people start to figure that out. Those that had the information begin to take profit, and the market drops in and fills those gaps. Now, that's how gaps work in the market, is that they're created by somebody knows something that other people don't. The market then jumps up and it doesn't get reflected in price until the rest of the world finds out the information. So right now there's a few gaps in the market. One is way down there, okay, at $4,425.77. The other are more recent and probably come into more immediate, not probably, they definitely come into more immediate play. That one right there at 5693, and this one right here at 5311.
Now, keep your mind focused on those pink lines because I'm going to add in our Fibonacci's here. And we're going to go from this low to this high. And then we're going to go from this low to this high. And the market could pull back into and fill both of these gaps before rallying back up and potentially creating all-time highs over the next few weeks or months. Now, that is pending what happens with tariffs. That is pending what happens with Russia, Ukraine. That is pending what happens with US, China. That is pending what happens with Nvidia and their sovereignty, sovereign ability to create AI systems in other countries. That is also dependent upon GDP and recession. Who knows, right? But what I personally feel is that if we do not break above this high and that level of support and resistance, then we are going to push down over the next few months and maybe get a little Santa Claus rally to come back at these all-time highs. Personally, and I said this, if any of you guys were at our major event with Woodford back in January, I predicted that this year would be a flat year, meaning we probably would have like a very low percentage growth. And then I am bold enough now, and I'm going to let you know, I'm going to be Nostradamus or I'm going to be Nostradamus, but I'm going to be one of them. I'm going to go ahead and say 2026, 2027, 2028 are going to be some very, very potentially rough years because history's already taught us what happens with tariffs. And I also have to say something. And I don't care which way you fall on this, and you may not like me after this, but here's a real simple fact. All that money that Doge was saving and cut from the government spending and all of that? Well, not only did it re-spend all that money, it added more to that. I just saw someone comment that a government bill can be big, it can be beautiful, but it can't be both, is what we are finding out right now. And we see so much of this spending that what's going to happen, okay? And then I'm also going to tell you and clue you in, and I'm going to leave this as a cliffhanger because I'm going to give you guys an opportunity to register for my session in a few minutes. I'm going to send you all the link to register for the session. But we are about to hit a very major, major, major hurdle in the United States. There is a 9.2 trillion maturity wall that's about to happen. $9.2 trillion of our debt becomes due in 2025. $9.2 trillion. Do you see why our credit rating was downgraded? Because we either A, need to refinance this, or B, we need to figure out a way to pay it. And that is what could lead to a potential scary time in the markets. Does that make sense? Yes or no? So short term, I think we push up, then we pull back down, then we may rally up and just in the year kind of break even. That's what I anticipate to happen. Now, there's individual stocks that I think are going to do better than others and things like that. But how many of you in here want to learn a little bit more about that stuff and how it could truly affect you and your trading, but also your retirement? Because that's where it's really going to hurt, right? Like, let me ask you this, okay? Just hypothetically. We saw a 22% drop from February to April. Imagine if the market dropped from where we are today down and filled this gap, and it was another 30% drop. So, in all actuality, the market drops 28%. Or there's one gap that I don't show because it's a little scary when you think about it. It is way down here. Let me go back. Right here at 3,900 and something. That would mean that we would go, if you think about it, from blue line to blue line. If your retirement fell 40%, would you be able to retire how you want? Yes or no? Would you be able to retire and stay retired? Would you have the income that you desire in your retirement? And so usually when we get to this point, I normally get the question about, all right, James, I'm ready to hear it. How do I, oh, goodness gracious. How do I not lose in the market? Right? How do I not lose in the market? How do I protect my money? And how do I ensure that I can retire? Which brings me to the main purpose of what we're here to talk about. This absolutely amazing tool that I'm going to be sharing with you all here in over the next few minutes. And this will be brief. And don't forget, those of you who are with me, I'm going to give you guys free access to my Sunday sessions that you're going to be able to join. So stick with me until the end of this. But the amazing tool I'm about to share with you has 4 major benefits. 1 is protection. 2 is investments/retirement, allowing you to potentially retire tax-free. 3 is access to your money, like right now access. And 4, tax savings. Does anybody in here want to pay more taxes, or do you want to pay less taxes? Who in here wants to pay more? Type in an M, type in an L if you want to pay less. Guys, I have a cohort member, someone that's in my class or whatever, right? He's from Canada, just left Canada because of the bill they approved there. Canada raised their capital gains tax to 66%. And their income tax is 52%, is the highest tax bracket. So think about it, right? You're trading. Imagine you make $1,000 and you got to give the government $660 of it. That's what's going on in Canada. Now, I'm not saying that's ever going to happen here, but there has been bills floated changing the capital gains tax and trying to change capital gains. And Lord knows, I hope it never does. But if it does, it wouldn't matter if you had the tool that I'm going to be sharing with you. So let's first talk about investments and retirement and things like that. The first thing I want to ask is about how many of you have a 401k right now that you're invested in? And let me ask you, the question that I'm really asking is, do you know how that 401k works? Yes or no? And I mean, like, if somebody said, hey, I'll give you $1 million if you can truly tell me how a 401k works, both the taxes, the investments, the returns, all of that. Could you say yes? Type in a yes if you know how it works. Type in a no if you don't know how it works. That's what I thought. And it's okay, right? It's okay. I'll tell you this, I'm writing my dissertation on it. So if you ever want to go to sleep and read 200 pages, hey, I'll let you have it. Okay. I'll get you a copy, print it if you want. But here's how a 401k works, right? I'm going to break it down into 3 phases. There's a savings phase, there's an accumulation phase, and then there's a distribution phase. So for the example I'm going to run you through is, let's say we take somebody who's making $100,000 a year, and every month they're going to contribute 10% of their income towards their retirement, their 401k. Now, their employer is going to match it by 5% as well. Now, I know some employers match 10%, some employers match 5%, but hey, that's what the employer matches is 5%. So over 30 years, they're going to deposit $330,000, and that is going to give them a whopping tax savings of 189,000 bucks. And that's amazing. Plus, they're going to get, that employer match. Well, the 330 is inclusive of the 5%, right? Match as well. So, which is amazing. No ways about it, right? Now, over 30 years, they're 300, and that should be 30,000. I'll fix that right now. That 330,000 should be, it will grow at about 8.2% per year compounded. That's the average return of the S&P 500 you can take any 30-year period, and it's generally between 7.9 and 8 and technically 8.1%. So I'm giving you a little bit better, right? A little bit better growth, 8.2%. Well, that compounded return is $1,422,573. So if you take this now into the distribution phase, ready to retire, but take my $1,000,000 and I'm a millionaire and I'm ready to retire. Wait. You see, one of the things about a 401k that is buried in that like 30, 40 page document that you sign in your onboarding is not just the fees, because the people who administer the 401k, they get a cut of your returns. And then the mutual funds you invest in, they get a cut of your returns, and they actually get the first portions of the market growth from your returns. And you don't even know that because you never see it. It's never even shown to you because they don't have to disclose it. But I digress there. The taxes is what I want to talk about. Okay. So you see, if you were to leave your 401k as a 401k and begin taking RMDs, required minimum draws, withdrawals, or if you were to take distributions, or if you would just start to take withdrawals when you retire, well, you have to pay taxes at the rate at which you contributed. Well, someone in the United States, if they're single making 100 grand, they're going to pay taxes at 34%. Well, that means that you're going to end up paying $483,000 in taxes, bringing your retirement under $1 million. Folks, I'll tell you this. This is one of the things that frustrates me completely, is that this is something that's never told to us, and you only learn it if you literally go through 40, 50 pages of legalese and the disclosures. That's the only way you learn it. Now, some 401ks, they'll transfer it to an annuity and this, that, and the third. And we'll talk about that in a little bit because I have something way better than that I'm going to share with you all. I'll let the cat out of the bag a little bit. Imagine being guaranteed to get a 39.5% return this year. If you'd like that, stick around. I'm going to give you a chance to book time with me and we can set that up for you. Okay, but let's compare the traditional 401k with the tool I'm about to reveal to you. $100,000 on both sides. 401k, we just learned you get $938,898 versus the 30 return on this tool, bringing you to $1.987 million. And you pay $0.00 in taxes on that, because everything I'm going to be showing you is potentially tax-free, depending on how we set up the investment. But on the one side, it's 100% tax-free. So your balance is $1,987,838, over $1 million more. If you had to choose the investment, A or B, A being 401k, B being this tool, would you take B, yes or no? Would you rather have the money outside in the green box, yes or no? Be honest. Just based on that, we're going to go through the hows and all of that in a second, but of course you would, right? And the question you're asking yourself right now has to be, how the hell is this even possible? And why don't I know about it? And why, if it's so good, why hasn't it been marketed to me before? We're going to share all of that with you in this presentation. You will leave here knowing everything about this. Now, the reason it does this is how the investments are structured. First of all, they're actually actively managed. They're not just some, hey, we'll throw it in this, and on the bad years, just give us more money. And on the good years, hey, give us more money. And there's going to be good years and going to be bad years, but it'll even out in the wash. And you're going to want this 60-40 portfolio split because that's what's great in the world these days. No, it's not, right? The other thing is that they are diverse and there is what's called a 0% floor. And I'm going to explain that here in a second in the power of the 0% floor. So I want to first start off with the investment side. Now, the first thing I'm going to do is I'm going to highlight the two investments that I typically help people stay in. And I'll talk about why. The first is the cap rate. What a cap rate is the maximum that you can earn from this investment. So most of you are used to mutual funds, right? That pay you a 12% or 7% or 5% or 3%, right? Hey, that's fantastic. And that's well and good, but that's the max that you can earn. It doesn't tell you that there are actually some out there that are fully uncapped, meaning if you had access to what I'm sharing with you, you could get, if the market went up 50%, you'd probably make about 30 or 40% from that over the year. Now, the next part of this is what's known as the floor, or well, actually, we'll do the floor rate last. Let's do the historical average returns, right? So your S&P 500 historical average at 6.94%. Uncapped S&P at 8.14%. So that 8.2 was about right? 8.14% versus 14 and 16%. I would take 14 and 16 all day and twice on Sunday over 8. Now, the next thing is the fees, spread rate and interest charge. Well, the two investments that I show you have 0% fees versus a 6.5% or even up to 10 and a 0 to 0.5. This has 0 and a 0% guaranteed fee, meaning you don't pay any additional fees here. Okay. Now, the last part of it is this floor rate. Now, you may ask yourself, what the hell is a floor rate? Well, it really boils down to this. It is a way that allows you to lock in profit and not lose in down markets. So what does that mean? Well, think about it this way. If you were you are all traders. Let's say you invested and you bought some gold futures and the market went up and you took a $100,000 account to $110,000. And then you closed out your trade and you now got $110,000. Well, then you reinvest, and in this time, instead of winning that 10 grand, you lost 30 grand. Or you lost, let's say, 30%. So instead of 110 grand, you now have $77,000. That's what the normal trader experiences. Imagine if you invested and you have that 110, and now that becomes your floor, meaning you can never lose anything beyond $0. If the market tanks, you lose nothing. If the market rallies, you make money. And what's the power of that? What does that even mean? So I'm going to show you guys this really quickly. So what this is, and can everybody read the numbers on the screen? I didn't even think to bold the font when I built this. I didn't even think about that. I do apologize. But what this is this is the S&P 500 right here. And this is every single year return up until middle of May of this year. So if you invested $250,000 in January 1st of 2014, as of mid-April, mid-May, you'd have about $749,917. That is a phenomenal return. Would everybody agree with me on that? Yes or no? Bill, Ben, Tony, my man, I missed you today. We were supposed to have our meeting, but hey, it's all good. We'll get you rescheduled. Um, let's see. Carolyn, Charles, David. Yeah, absolutely. Would you? That's a good return. Decent. Well, take a look at what this is. So in 2015, 18, 22, and up until mid-month this month, the S&P was actually negative those years, okay? Now, take a look at what happens when we change those negatives into zeros. You go from $749,000 in return to $1,039,316. And this is what's called the sequencing of returns. So, got a quick question for you. Maybe the dumbest question I ask all night, but would you rather have option A or option B? Option A or option B? Type it in right now, A or B. I want to see if we're all on the same page here and if I've convinced you about the power of a 0% floor, right? Obviously, B, 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 B. Of course, right? The 0% floor is extremely powerful. Can I think about it? Tony, my man, I love it. I love it. I hope you're doing well, buddy. Now, look, this is because of how this 0% floor. So I'm going to ask you, like, imagine being able to invest in BlackRock and gold and the S&P and real estate funds and foreign countries and companies and bonds even without ever losing a penny. And here's the great thing. Some of you out there don't know this, but you can begin doing this for as little as $250 a month. Not thousands of dollars a year. Now, this next part is really, really, really one of the things that separates this and makes this what I feel is every trader's dream. And I'm going to tell you why at the end of it. So this is all about access to your money, okay? You see, you have the ability to borrow your money at any time. Now, notice I said borrow your money, not take it out, but borrow. So if you were to invest, right, you have a value, a cash value, an investment value that's building up in your investment account. And in your first 10 years, you borrow out at an effective interest rate of 0.9%. And in years 11 on, you borrow out at 0%. But the amazing thing is your money stays invested. So I'm going to give you guys two examples. The first one I'm going to do right now, okay? Let's say that you're new to trading and you're inconsistent. You recognize you're inconsistent. Instead of paying $500 every time you blow up a prop account, or instead of like doing all these little things and buying every new shiny course and this, that, and the third, you decided to stick to one or two strategies, practice them for a year, demo trade, do a small account like, $400 or $500 of real cash and build consistency. Novel idea there. But at the end of your first year, you borrow out $7,285 and fund your trading account now with $7,000. As long as you make more than 0.9%, you're making money. Your money is working double. Every dollar is making more dollars. When your money makes money, that's when you begin to really make money, right? Or you say, okay, I borrow, $5,000 this year, and then I borrow $20,000 that year. Now I have a $25,000 trading account, and I can be a pattern day trader. I can trade options. I can trade all the futures I want. I can trade how I want to trade. And now your money is still accumulating 14 to 16% return per year, and you're making money using your money. Like imagine being and funding your own self when you prove to yourself that you are capable of having the consistency that you desire. That's the difference between a great trader and a, okay trader. Now, the other part is kind of future proofing yourself and doing what's called taking advantage of what's called the IBKR rule, which is being your own bank. And this is a real life example. Actually, one of my very close friends just did this with his deal. But basically, he bought a new car for 60 grand. And instead of paying, out of pocket for that car, he just borrowed out this money and he's already 11 years in. And so he's paying 0% interest on his 60,000, and instead of paying the bank, 3-4% interest or whatever it was, he's paying himself back and the money staying invested and it's growing. So he doesn't have to, right? He has an asset that is buying his depreciating thing, right? Buying his toy, and then he's paying himself back over time at 0% interest, which is just absolutely amazing when you think about it. Right? And it makes the purchase, right? Imagine like you want to pay for your kid's wedding or you want to help send them to college, and now you have an extra $400,000-$500,000 to do that with. And it doesn't cost you anything in interest. Because this is what it's all about. This is how wealthy individuals stay and build and grow wealth. Now, the next thing is taxes, okay? The beautiful thing about what I'm showing you here is everything is 100% tax neutral, meaning you won't pay taxes on any gains. You don't pay taxes on any withdrawals. You don't pay taxes on anything. And I'm going to show you what that looks like in just a little bit. So just the way it works is distributions are made as loans, and loans don't carry taxes. And it's also judgment free. So if you get in this sue happy society that we live in these day and ages, it seems like everybody has a lawyer, or everybody has a lawyer, and they are sue happy. And this is judgment free. Nobody can ever take this from you. Ben says, hey, how do you pay the loans back? Ben, great question. So you can pay it back over time yourself. Just as you would like a bank, you'd send in a little check, or technically speaking, you don't have to, and I'm going to show you why a little bit later on. Okay. Technically speaking, I don't like telling people that, but technically speaking, you don't have to. I'll show you why. Now, lastly, is that it offers protection, right? And it offers a insurance protection. We live in a world where 1 in 3 people are going to have cancer. 1 in 2 people are going to have an autoimmune disease, right? And most people have just enough insurance in this world to piss off the people that they're dead, because now they got to come out of pocket to bury you, and they, it's like it's a hindrance, not something to success. Or, right, we buy insurance on our phones, on our computers, on our house, on our cars, on our electronic devices, everything. Hell, even my wife and I were going to go to Ireland, and we're able to buy insurance on our trip these days. But people don't, all of that stuff is replaceable. You're not, right? You're not. And so the other thing is that this is the actual #1 tool for building wealth in the world. You're about to see it in a second. I'm going to show it to you and reveal it to you in a second, right? It gives you the confidence that your family's going to be protected if something happens to you. And because it's insurance, it's tax-free and judgment-free. It's indexed investments, no losses, and you can borrow against it at any single time. Now, I'm going to share something with you, and it's a personal story. One of my agents that works under me, his father got esophageal cancer when he was in college, and his father was working for, I'll say this, a very prominent government-based space agency. I'll let you figure out which one, of the only one. And when he got the esophageal cancer, he was in the hospital for like 2 months, and they let him go because he can't work, he can't perform, so they let him go. So he lost his health insurance and he lost his life insurance. Well, because he had one of these policies, he was able to pull out like $3 or $4 million, pay off his kids' college, pay off the house, and go to Houston to MD Anderson and beat cancer and is now a grandfather, almost soon to be a two-time grandfather. All right. And that's absolutely amazing that, that's happening. And but it's a reality that this can do of this tool, I should say. Now, the other thing is that this is the greatest wealth creation tool in the world. Honestly, there's nothing better that exists. I know because I got 200 pages written about it. And it started, all my research started with this chart. So I was doing some research at the Federal Reserve of Economic Data. It's called FRED, if you will. And I was looking up at the change in wealth gap over the last number of years. And I was just like, wow, this is crazy. In 2014, just 10 years ago, right? In 2014, the US had the top 10% of wealth holders had $54 trillion. And the bottom 10% of wealth holders had $54 trillion. Just 10 years later, the bottom 90% and the bottom 10% and the top 10%. The top 10% have $101 trillion and the bottom 90% have $50 trillion. The wealth gap has more than doubled. And so I started to look into why, right? That's what research does, is we ask the question, why? So I started going through and I looked at investment choices. I looked at debt. I looked at home ownership. I looked at job, upward social mobility, all of these things, right? At the extremes, yes, there was a big gap, right? Of all of that stuff. I'm talking top 1%, bottom 1%, the huge gap there. But top 10 to bottom 90, there shouldn't be that much of a gap. And then there were a couple of things that stood out, but the biggest difference was this pie chart right here. Is that 87.8% of all life insurance premiums are held by the top 10% of wealth holders in the United States. The rest of the US holds 12% of the policies. You see, there was something that I saw on YouTube or something like that called the waterfall method that the Rockefellers use and the Buffetts use and all these other individuals use. And it's a way to pass on wealth without any taxes or estate taxes and things like that. And it's using life insurance. And I'm going to teach you guys all about that. And I'm going to give you a chance. And a matter of fact, I'm going to go ahead and do it. Right now, I'm going to send you guys a link, 100% free. Okay. We can talk about trading. We can talk about anything you want. This is a link to my calendar. Now, Tony and Ben, you gotta book with me because I was gonna call you anyway. Because Tony, we were supposed to meet today, and Ben, we were supposed to meet sometime soon. So you two go ahead and book. Everybody else, I want you guys to book time with me. You can book time with myself and Brent and and all of my agents, where I'm gonna have them in there with us. They're learning and they're using these tools and things like that. But Brent Birch, who myself, all of Tyson, all of us here are very, very big believers in what I'm sharing with you. And so you can book time with me, no cost to you. Go ahead and do it now. This is something that my calendar is going to fill up. I know it will. Sunday morning, I'm not available. So if you book Sunday morning, I'm going to go ahead and block that off right now. But so what I want you to do is book some time with me ASAP. Okay. Okay, Ben, not a problem. I need to figure out what's going on there. But let's see. Let me go on my calendar. That's all right, Tony. I got to figure out what's going on there. Let me go June 1st. So, busy. Save. Okay. So, go ahead right now, use that link, book some time with me on my calendar, and I want to share, the insights for you. I want to build this for you. I want to see if this could help you. Okay. Now, don't get intimidated here because, a lot of people have the question immediately like, Well, why haven't I heard about this before? I'll tell you my personal, I can't tell you why for indefinitely, right? Um, that is so weird, Tony. If you want to meet tomorrow, Tony, I have time. If you want to book it then, or just email me and let me know. But I was waiting for you, and but we can meet tomorrow. We can meet anytime next week as well. Now, usually I get the question like, why haven't I heard about this before? One, I think it's marketing. I just think there's a lack of it, right? No, Ben, it's not. But if you want to book time with me, please do. Um, absolutely would love to help you. One, it's marketing. Two, commissions. Okay. If I'm a financial advisor, I can choose to either A, make 1 to 2% on every million of assets under management you have with me, which totals like 30% of your actual return. Like I did the math because somebody didn't fully understand, like, there's no way that works. I'll actually show it to you really quickly. Not to get too off topic, but so if you had a financial advisor and you started off your account with $150,000, right, and you grow 8.2% a year at 0.68%, their return, okay, right, is they're gonna make $473,000 in advisory fees off of your 1.7 million, plus you pay taxes on that. So that takes you down to like 1.3 minus the 20% taxes as well. So that's another 600. So now you're back below 100,000, $1 million. That's literally how this game works, right? So why would I ever want to sell you a product that I make very little commission off of one time and not even from you? Okay. Absolutely, Ben. It will 100%. There's a possibility that we can do something for you. Okay. So book time on my calendar. All right. So, that's one of the reasons is that you don't make a bunch of money. But I'll be real with you guys. Here's the reality is my goal and my team's goal is to help each and every individual of you, not because we're in it for the money, but because if you refer 4 or 5 people to us, it'll take care of itself, right? I grew up really old school. You take care of people, people will take care of you. If you give everything you can to somebody, they will give you everything they can back. And that's the way I believe. Maybe it's old school, but that's just who I am through and through. And so, I really want to spend time with you guys and share time with you because I know that of what this can do for people. The other thing is that we've been taught to believe that like pensions and 401ks and all of that, that's the big thing, right? You have bankrupt trucker, Yellow Trucking loses ruling over 6.5 billion in pensions debts. Yellow Trucking Company took $6.5 billion from the truckers and used it to pay their debts. And there's nothing that the pensioners can do. They lost it all like that. And I will tell you personally, I have a very close friend of mine. Her dad worked for United Airlines for 20 years, 17 years in, lost his pension, and has had to build it back over the next 15 years. Awesome, Ben. I appreciate that. Right? Over 15 years, he had to build it back. Because this is truly one of the most sad things that happens in the US is that pensions aren't safe. 401ks aren't safe. There's a company I used to work with, and they have locked their 401ks from their employees being able to take them out because the company's beginning to fail, and who knows what happens to that at that point in time. Now, I want to share with you some case studies because there's several different tools that I use, and here's the first one, okay? This is somebody, and you don't have to have $1 million. I'm going to share with you a bunch of people, but somebody put in $1 million into their retirement, into this account. They're going to retire when they're 65. They get a instant 20% bonus. So that $1 million is now 1.2 million. And then they get a 10% yearly guarantee. That $1 million, when they go to retire at 65, will be $1.7 million. And they will make $96,900 a year guaranteed for the rest of their life, no matter what. And they can never lose a penny of their money. Now, this is another individual, age 52, investing $500,000 into this. They get a guaranteed $65,905 per year and an instant bonus of 30% and a guaranteed yearly 9.5% return. That is 100% guaranteed. Like, I can show it to you in contract. There it is. 9.5% guaranteed roll-up rate. That's exactly what you get. Okay. Now that's that side of things. Now, on the other side of things is the tool I've been talking about. Now, I'm going to give you guys a couple of different scenarios here, and I know each one of you are unique. That's why I do the one-on-ones, is because when we book those one-on-ones, I can build something specifically for you, okay? So this is somebody who had $400,000 in life insurance. They're 55 years old, and they're putting away $2,000 a month. Now, granted, this can be done with as little as $250. Don't forget that. This individual at age, they will have just over $1 million in their retirement in total benefit when they go to retire at, let's say, 60. I have them until they're 69. Okay. Now, this person, $300,000 of life insurance. Now, this is actually one of my favorite clients that I've ever did a deal for. They're a baby. Literally 3 months old when we did this, okay? Their grandmother, who I'm very close with, she built this for the grandson and is doing just $300 a month. And it allows for him to put in more money later on and things like that. But, okay, at the end of so in their first 11 years, they build up great cash value. And when they go to retire, right? This is what's crazy. They will make $262,440 tax-free for the rest of their life. They're going to have over $5 million in retirement. And they did that with $300 a month. And you could do this with as little as $250 to $500. See, the opportunity is there. Right? The opportunity to get a 0% floor, you all have seen that benefit here. The opportunity to get returns like this. The opportunity to not lose if we do enter in a recession. If the worst of the market happens, you don't lose anything. But if the best of the market happens, you get returns like this. So if you are ready to invest and be protected against all losses, really simple, all right? If you want more information, if you want to see if this can work for you, just simply book your appointment. Let me test something real quick before I open my mouth. I don't know if that QR code still works, but let me see here. Will cover me in powdered sugar and call me a donut. It does still work. So you can literally scan this here with your phone right now, and it'll take you straight to the site to book time with me. Now, I'm additionally going to send you all a link here, okay? I'm going to additionally send you all a link here. And this is for this week on Sunday night. I'll be doing my Sunday session. I just sent it to everybody. I'm giving you a month of Sundays absolutely free. So all you have to do, guys, use this link. You'll be registered for my Sunday session. In the Sunday sessions, we go over trading opportunities. We find trading opportunities. I evaluate your stocks. I find stocks to trade, and I help and we call out trades if there were. We found Disney, made money. We found ES, we made money. Gold, we made money. OKLO, we made money. SMR, we made money. LEU, we made money. Right? Those are all trades that we've taken over the past couple of weeks, and they've all paid out. So if you have questions about it, use that link, register for the session. I'm sending you guys the link first, right? You are first in line to get the link. So all you need to do is you can book time with me directly there, or if you don't know how to use the links and stuff like that, just type in your phone number really quickly. I'll capture that. We'll give you a call in the morning and we'll book some time with you for you. Okay. Just if only I can see your phone number. Nobody else can see your comment or anything like that. So only I can see your phone number. So if you want to type in your phone number because you couldn't get the link to work, or, heck, I know how technology is and how frustrating it can be. So just simply type in your phone number and I'll be glad to book time with you as well. Now, I get it. There's always the yeah buts, right? This one financial guru says, Don't buy life insurance," or "Don't do this." And I get it. You know, 15, 20 years ago, we wouldn't be having this conversation because the way the products have changed and evolved over the last, I guess, actually 30, 40 years ago, um, it it has truly, truly changed everything. It has turned the market and opportunity on its head and has truly created the best wealth generation. Okay. Um, Now, the other is I've heard there's so many fees involved because there's not a lot of fee. Everything I showed you is fee inclusive. You don't pay any fees. What if there was a situation where you couldn't pay? That's fine. There's a minimum to keep your policy open, and that's all we have to do. And lastly, what about high commissions? You don't pay a commission. No money that you put in pays me. It all stays with you. Your advisor can't say that. And lastly, what if they don't pay? That's why I work with companies that were around prior to the Great Depression and will be around past the Great Depression. And I already have something in place at work. I love that one. What if you get fired? What if you retire? Literally, I just did a policy for somebody. She retired from work and they wanted to charge her $250 a month, or no, it was $500 a month for $150,000 worth of life insurance. I was able to double her coverage and cut her price in half. That's the kind of tools that I have access to. I'm an totally independent. I work with 140 different companies. And what I do is I present you the opportunity, then I go out and find the best company for you, and then we make sure that they're good, you're good, and then we go from there. That's my process. It's client focused, client first. And then the other thing is that I love to trade, so we can always talk markets. I love to invest, so we can always talk investments. I also own a managed fund. So if you're interested in that, there are some different limitations to that, and that I talked to one-on-one about. But the time with me is going to be well spent. And even if it's a no, I bet you leave there with something. You'll either leave laughing, you'll leave whatever, but I guarantee you leave with something. So, Anthony, I don't know if you booked already, but if you hadn't, if there's a time you want to meet, just let me know. I'll block it off on my calendar right now for tomorrow. Ben Patel, you as well. If you want to meet in a specific time, just type in the chat what it is, and I'll block that off for you as well. Or awesome, Anthony, awesome. Looking forward to it. Ben, there's a couple of different things that I have access to that I'll talk to you about. Ben M. We'll do that during your appointment. So look, guys, I'm gonna leave this up for another 30 seconds or so. If you have any questions, need anything at all, don't hesitate to type in your phone number, ask the question. I'll leave it up for another couple of minutes, and then I will just reach out. I'll jump back on and answer those questions if need be. So I'm going to send you the link for the Sunday sessions as well. Go ahead and register for that. And I will also send you the link to book on my calendar as well. So here you go. So that is the just of the kind of crux of the presentation. Any questions that you have? Okay. Any questions you have? Bella, let me see here. I'm going to reply directly to you. That's the link to book with me. And this is the Zoom. No, you do not, Ben M. You do not. And that's the Zoom link as well, if you need that. And then Bella, in here, if you need my email, look, I don't even care. Give it to everyone. OneLifeFL.com. That's my email address. So if you see that email, that's me. All right. So you got my email now. Let's see. Any other questions? Well, fantastic. Look, guys, I appreciate your time here this evening. I thank you all for joining. Um, uh, Bella, why don't you do this? Type in your email and I'll screenshot it. And I will send you an email so you have my email address as well. Alonzo, yes, I should be able to send that to you. How about this? Alonzo, would you type in your email as well and I'll send you the recording? If you wouldn't mind, or if Alonzo, if you want to type in your phone number, perfect. Thank you. So I got you two. Let me take a screenshot of that. Perfect. Beautiful. So, anything else before we go? Well, guys, look, like I said, I appreciate you. I look forward to seeing you on Sunday in another webinar about trading education, something. Really, really excited. I can't wait to help as many people as I can. Want to wish you guys health, happiness, and success at trading. Have a great day.